Hey, everybody. Welcome back to the Mustard Seed podcast. This week I have on Adrian Morris. Adrian, welcome.
Joe, we've been talking for a while, so this is the first time we've been on camera together. Looking forward to having this conversation.
Yeah, absolutely. And I think it's a perfect time to have you on the show with the, you know, hot topic of Bitcoin treasuries and how the market is responding to really just the last last week or so. I mean,
Mhm.
Bitcoin just did hit an all-time high, I think 5 days ago, and Twitter right now on August 19th is a little angry, to say the least. Maybe. What do you? How are you thinking about the market right now, and how everyone's reacting to it?
So I think there's a few things going on. We did hit that fresh all-time high just above like 124, 200, whatever it was, and people got justifiably excited. You had the Ethereum bros even getting excited because it looked like Ethereum was going to cross the all-time high, and then we just kind of went "Thoom," and we retraced. And I did a post a few weeks back saying that, I always like to remind people about seasonality and market trends. And, seasonality was painting a pretty definitive picture that August and September were usually months where we can see a bit of a retracement. And I know that in post halving years, that hasn't been the case in August and September. But what people are failing to realize is that this cycle, and I know I'm probably jinxing it by saying it every time I say it, this cycle really is different. So, we had the all-time high before the halving, right? We had all kinds of events that should have killed Bitcoin, the tariffs, the situation with Russia and Ukraine, the US bombing Iran's missile sites, so on and so forth, that in cycles past would have caused like at least a 20% retracement, 25%. And that didn't happen. So that's why I posted that to let people know that, statistically, it's still more likely than not that August and September would follow more seasonal trends, given that Bitcoin is becoming a truly macro asset that's moving with markets. Um, and it was likely that we would see a pullback. So I wasn't necessarily surprised by the pullback. What I am surprised by, kind of like what you were alluding to, is you would assume that we were at 50K right now. The sentiment is bleak out there, and it's a little bit surprising for me that we've been trending over 100K now for how many days? I lost count. It's been a ridiculously long time that we've been over $100,000, and it's been a ridiculously long time that we've been over $110,000. So the fact that we're down to 115 or whatever it is right now, it shouldn't be cause for alarm. But I think a lot of it is because of the Bitcoin treasuries. And I don't say that to be disparaging. I say that just because the treasuries are leverage plays essentially on Bitcoin, right? So it stands to reason that if Bitcoin goes down, they're going to go down more. And I think that a lot of the retail crowd is being represented in these treasury companies, all of them, Strategy, Similar, Metaplanet, Smarter Web, so on and so on and so forth. I think that the retail community is pretty heavily represented with those treasury companies. And I think you have a lot of newer entrants into the market, and they are experiencing, drawdowns. They're experiencing, you were up 5x and now you're barely even or perhaps even a little bit lower. But that's Bitcoin. That's what Bitcoin does. So I think that a lot of people are getting their education in that right now.
Yeah, I mean, Bitcoin is hyper volatile, and obviously that it works both ways. I think one of the focal points of the last few days has been Strategy's mNAV guidance. Can you
Mhm.
maybe like walk back and say what occurred with their mNAV guidance, just for people that haven't been following as closely, and how are you thinking about what they did with their mNAV guidance?
Yeah, so at a high level, at the last earnings call, they put out mNAV guidance. Now they put it out two different ways. First, they put it out in the actual SEC filing, and then they did the actual investor call where they had it on a PowerPoint. I think everyone is focusing on the PowerPoint. Now we can come to that in a second. What essentially was said is that Strategy would not be issuing the ATM equity offerings on the common stock MSTR under an mNAV of 2.5 mNAV unless they were either paying the dividends or paying down debts or corporate use, right? That was a very, very general guideline. However, with that guideline, they did say that the company would review these guidelines and at management discretion, they would revise them and they would change them. So that's how I received the message, and that's how a lot of the guys in True North received the message, and that's how a fair chunk of investors received the message as well. However, on the earnings call, I think the focus was on the fact that the mNAV guidance, as it was presented, didn't have that. I don't want to. You can call it a disclaimer, you can call it fine print, you can call it what have you. But the earnings call, I think, gave the impression to a certain percentage of investors that it was not going to be issued under 2.5 mNAV. That was going to be the go forward path in perpetuity until further notice, until there was some larger revision or something to that effect. And the fact that they issued, like, instead of just saying, one, we will not issue mNAV under 2.5 unless we're paying the dividends on the preferreds, two, or to pay corporate debt, or three, now it's saying essentially when it's advantageous to the company to do so. So that, for many people, they are reading it as them reneging on the original guidance. However, I think where the disconnect is coming is twofold. One, in how it was communicated, and two, in how it was received. It was communicated in a fashion, I think, that strategy may have either assumed, rightly or wrongly, that the actual guidance and the specifics of it was in the actual disclosure. So therefore, that they were doing their due diligence that way. However, the way it was communicated in the investor call, in the actual earnings call, is giving a different purview of that to some members of the investor base. And I think there's a broad disconnect there. And now people are thinking that strategy, some people are going as far as to say that they lied. Some people are going as far as to say that you can't trust Sailor. Others are saying that they, quote unquote, dropped the ball with how it was communicated. I'm not going to get into the nuances of all of that, but what I will say is this. When you are investing in an equity, it is your responsibility to educate yourself about the nuances of that investment. And I think that this could be me being too harsh, perhaps, but from my perspective, I read those SEC filings. I read those disclosures. So, given the fact that True North has been so methodical about putting out the information the way that we have, and other members in the community have been as well, I think that something may have gotten lost in the translation, where strategy probably assumed that the investor base was probably more informed than they were, while the investor base assumed that strategy was obligated to give them a point by point coverage of every single thing that was going to happen, because strategy has been so transparent. If you take a look at strategy.com, they have the metrics for everything, right? You take a look at how they've been announcing their Bitcoin purchases. You take a look at how every single announcement has had the actual disclosure in the filing attached to the actual tweet. They've gone out of their way to be very, very transparent. And I think that this may be a rare case where we have something going on that's twofold. I think transparency actually hurts them in a way, because when you're so transparent, it's very, very hard to adapt to the market in real time, because you've put out a notification, you've put out notices, and now the investors expect you to tell them in real time if you're going to do something. And then on the flip side, their level of transparency has created this expectation of, I don't want to say over disclosure, but maybe over disclosure is the right word, that if they put something out, it must be so. And any deviation from that is seen as a disservice to the investor base, as I think is how it's being perceived, because they have been so transparent. But I will also give people watching this and people in the community a caveat. Do not assume that everyone screaming online is your friend or that has your interests at heart. They could very likely be frustrated by price action for their own means, and they're venting that. So don't get sucked into that. If you are upset with strategy or whomever, or even me for how I put things out there, leave it that way and let it be so. Do not allow others to sway your opinions. And perhaps it is time that investors take on some responsibility in this, because, as we've said numerous times in True North, and I've said, I'm not sure you have said, investing in these companies is not an investment in Bitcoin. You're investing in equity. And you have to understand the nuances that come with investing in equity. And I'm sorry, that was a very, very long answer.
No, I think that was really good and really interesting. Do you think strategies management team, when they issued the guidance initially, do you think they were like very optimistic that their stock would begin trading toward 2.5x mNAV? Or do you think that it was just guidance that they were issuing? They didn't necessarily know how the market was going to react to it initially, and it was more of like a way to signal to the market, how transparent they're being. How do you think they thought about it initially?
So here's where I think they probably did make a mistake, and I've actually shared this, and I'm not sure if I shared this with you in our brief conversations, but where they made a mistake, in my view, is twofold. One, I think issuing the guidance for mNAV was a mistake altogether. I think that issuing a set guidance on something you can't control was a misstep. mNAV is a market multiple. So one of the things I've been saying very recently is that price is set at the margins, but the multiple is set by the market. They have no control over what mNAV is. That's going to be determined by the market. And I think that was the first mistake. The second mistake, and this is where I'm going to piss people off, I'm going to say it anyway, was listening to the noise on Twitter. So many people were harping on the ATM as being a driver of price that they thought to themselves, this is how I read it, they thought to themselves, we should listen to this investor base since they're being so loud and so vocal. We have been essentially partners in this throughout the FinTwit X community, that perhaps we should say to ourselves, let's reassess what we're doing here. We do not think the ATM is impacting price, but the market, the market probably doesn't think it, but this investor base does, and this is a very loud, very passionate portion of our investor base. So let's address their concerns. Let's do this, and I view it as a form of investor relations as to why they put out the guidance in the first place, because that's why the guidance in the disclosure said at management discretion, they can change it. From the very start, they gave themselves a means to adjust. However, because there's some that are so passionate, so emotional, so invested in this, they saw under 2.5 mNAV, they're not going to do the ATM unless it's to pay the dividends or pay corporate debt. That's all they saw. And I think that created the storm that we're seeing now. The misstep, in my view, wasn't how strategy issued an update to the guidance. My view is that it was a misstep issuing the guidance in the first place. They can't control mNAV, so issuing guidance on that, I don't think that was the best move. They cannot control how investors would react to if they have to make a change in that guidance. And the third piece I'll add on is that it's actually rather short-sighted. There's no guarantee that strategy will go above 2.5 mNAV. Now, this is not me saying it will not. What I'm saying is there's no guarantee that it will or when that will happen. If we think about it very logically, Bitcoin's price could explode and they can still trade at a 2.0 mNAV to that. If you think about it, that'll represent a much higher share price, but it will be a share price that they cannot take advantage of because they can't issue ATM equity offerings because they're under 2.5 mNAV. So I think that in trying to assuage investor concerns, they back themselves into a corner. And I think what this new guidance, this update to the guidance represents is, to your question more directly, I do not know if they thought the equity price would automatically start trading towards a 2.5 mNAV, but I think they thought the investor base on X was more representative of the share price than it actually was. So they assumed that there would be an upward tick, and they assumed perhaps that there would be more of a sentimental shift. However, the sentiment, mNAV is a market multiple, and that, in my view, is sentiment. What is driving this trade is institutional players, it's the hedge funds, it's the large holders. It is not the community on X. The community on X is very passionate, the community on X is very engaged, but they're not driving the trade. And I think what they inadvertently did is they catered to a very passionate investor base, but they may have lost view of the overall trade as a whole. And that is what we're seeing now is the tension that now exists between them trying to please both sides of the equation, but they can't. So that's why I think very, very simply, Well, that was not a simple answer, but very simply is why I think that the guidance issuing it in the first place was the misstep, not how it was communicated.
Do you think that this is like a fundamental long-term negative aspect of like strategies, Bitcoin strategy going forward? Or is it like just a small little thing that was a misstep and doesn't really change the long-term thesis of strategy? How are you thinking about that?
It doesn't change the long-term thesis for me whatsoever. I think that this is a misstep. And again, not in the communication, in them even considering it in the first place. I think they set themselves up for failure. I think that there's nothing they can do to control mNAV, contrary to what certain people online are trying to make it seem like. The ATM is not driving price. It is not as if Saylor and Fong are in the back office somewhere telling people to execute trades in a way that's going to manipulate the mNAV and is going to manipulate share price. That's not what's happening here. And I think they set themselves up for failure with that. Long term, well, even short term, but also long term, my thesis remains unchanged. I think that the value for strategy is as a leveraged beta towards Bitcoin. It is as a Trojan horse into TradFi for Bitcoin, and now as they're expanding with the preferreds, it is a way to have a preferred stock offering that pays a dividend that is backed by Bitcoin. Oh, and I can touch on that as well. The preferreds are going to take time to scale. And I think now the market's aware of that. And strategy is becoming very aware of it. And I think that they're adjusting their plan accordingly. If we take a look back to August 2020 what we see now, no one would have seen the leveraged Bitcoin plays. No one would have seen the dividend ETFs. No one would have seen all of this growth that happened in the options market as a whole and to the company as a whole. I knew Saylor thought that the company would grow in market cap, but I don't know if he thought that they would 100x in 5 years. So the level of growth that we've seen, I think, is something that strategy had to adjust to, and they're growing into that now with the preferreds, and they're going to grow, and the preferreds are going to grow as well, and then they're going to be able to do more and more and more with the preferreds. But what they're going through right now, to me, is growing pains. So that's why I'm trying to be patient, and I'm trying to have a longer term horizon. If I allow myself to be swayed by the day-to-day gyrations and the week-to-week gyrations, I would be, very, very stressed out. I think that it's all about the long-term perspective, and my long-term perspective has not changed.
Yeah, I mean, I think you made some really good points there. I think like the 5 years of strategy existing and being this somewhat leveraged Bitcoin play, it's interesting because like over the last 5 years, it's probably been one of the best performing public equities in the world. It may not be the top, but it's one of the best. Yet sentiment is down so bad right now, despite it being so high. And then also you have, Saylor, who for the last 5 years or so has been encouraging so many other corporations to just copy his strategy. This has to be one of the most like unique, interesting, stocks in the history of financial markets.
It absolutely is, because so we can talk about that from a variety of angles. Angle one, the stock market is inherently adversarial. Strategy, Semler, Metaplanet, are they adversarial? The more you buy Bitcoin, the more Bitcoin goes up. The more Bitcoin goes up, the more the market cap of your company goes up. The more the market cap of your company goes up, the more the equity price is going to go up, and it's beneficial, right? So the reason why I mention all that is to say that this is creating the dynamics of the first traditional finance cooperative mutually beneficial trade. That is why Saylor has been retweeting all of the announcements from all these other companies. He's trying to spur adoption. He's trying to do whatever he can to spur adoption because he knows on the back end it's going to affect him. Is that self-interested? Yes, but it's also mutually beneficial. So that's an entirely different dynamic altogether there. Then we have the fact that, as you just mentioned, the performance of the equity has been unreal. They're up 3,000% since they issued this, since they started the Bitcoin treasury, the Bitcoin treasury model, the Saylor model, however you want to phrase it. Since they started, they're up 3,000%. They went from $1 billion market cap to over 100 billion. But to your point, if you take a look at sentiment right now, you would swear that it's been the worst performing stock over the last 5 years. And I think that's because everyone's biased to their cost basis. You have a lot of individuals that bought at the peak at 543, and they're very, very frustrated. But you also have individuals that bought when we dropped down to $100 and $130, whatever it was last year. They're happy. You have individuals that bought at 240 this year, and they're happy. So what we have right now is, and this is again where I'm going to frustrate a lot of people by saying this, you have a lot of short-term minded people that are looking to get rich quick, and now they're frustrated, and they're venting that online. You have a lot of options traders that are trying to push narratives because they don't like the fact that volatility has declined on the equity. However, to them, I would say, have you been paying attention to Bitcoin's volatility? It's been dropping ever since the ETF's launch. Bitcoin is now a maturing asset class. It is very convenient to blame Saylor for everything, but what people need to do is look at the market as a whole and look at this equity as a whole. It is heavily influenced by Bitcoin. I just crunched some numbers. The correlation between Bitcoin and strategy is sitting tight at 50%. So what that means is fully half of strategy's price movements are explained by Bitcoin. Perhaps you need to scream at Satoshi instead of screaming at Saylor. Or maybe stop trying to trade options. Or maybe understand that trading options is adding leverage risk onto what you're doing in the first place. So take your wins and take your losses and stop screaming on Twitter about them. There's all kinds of things that can be done, but really and simply, people need to take stock of why they're investing, understand whether for them, are they an investor or are they a trader, and need to allocate funds appropriately and adjust their strategy, no pun intended, appropriately. But it is so interesting that we have seen so many people brought into this equity, and also for Semler and for Metaplanet and for all of them that are being brought in for different reasons. And we're seeing the adversarial dynamics play out in real time. So what we have is a cooperative trade that's manifesting in traditional finance with an adversarial investor base that are all fighting and arguing with each other over what the equity should be doing. And that's all because these equities sit on top of Bitcoin. There's no way to look at it simply as an equity anymore. But at the same time, your relationship with them is as a holder of an equity. It's a whole new model. And you're right. It is very, very interesting. It is very interesting from a market psychology standpoint. It is very interesting from a market sentiment and investor behavior standpoint. And it's very interesting just from an overall structure standpoint that you have equities that are now moving with a commodity that is exerting bi-directional forces on the equity at all times. And it makes things very, very hard to predict.
Yeah, no, those are some really interesting points. You tweeted this phrase the other day, and you've kind of explained it a little bit, but I think it's worth going into more detail where you said Bitcoin is as signal, MSTR as amplitude. Can you kind of elaborate on just what that means?
So it's very similar to what I just said in terms of how Bitcoin impacts strategy. Now, so people have explained this in many ways in terms of the beta. It's a beta play, right? So the beta that you're going to get on top of Bitcoin is strategy is similar, so on and so forth. But the reason why I use the phrase signal versus amplitude is that my view, and I think that modern market theory bears this out, is that markets move on sentiment, and we use fundamentals to justify that sentiment ad hoc. So people think that when you make statements about NVIDIA being overvalued or Palantir being overvalued, people think that is an objective statement, but really it is a subjective assessment that reflects the assessor's own bias. There's nothing that can say what is overvalued or undervalued, because if you're going based on fundamentals, nothing would trade at a multiple above 1. Anything above 1 is investor sentiment. Anything above 1 is market sentiment. And the extreme nature of some of these valuations is a reflection of market sentiment. So that's why I'm using the view of a signal, which is Bitcoin, and amplitude, which will be the multiples that you see on top of it. It is not something you can assess in terms of fundamentals. It is something you have to assess in terms of sentiment. And the reason why strategy in previous cycles had such a high amplitude that topped out just over 6 is because it was the only player in the market. at that time, right? Now you have similar, you have Metaplanet that got a significant amplitude on that multiple because Japan, new market, new dynamics came into the play. There were all kinds of narratives that came into Metaplanet that made it a new play on Bitcoin, which is what saw the amplitude crank up. So what we need to think of these equities are in my view, and this may be very different from everyone else's, is that you are not making a bet on an equity. You're making a directional bet on market psychology, and you're making a directional bet on Bitcoin adoption and Bitcoin price. And what you're saying is, if Bitcoin is a signal, I think this particular equity, for whatever reason, can get significant amplitude on that signal. And that is how I view them. So that is why when the price is doing like this, I'm not really swayed. It's because what I understand is that sentiment shifts, amplitude and the amplification will shift. Therefore, it is only natural that the gyrations are going to be part and parcel while I hold this particular equity. And I've seen it go as high as 6. I've seen it go as low as 1 when it comes to strategy. And what is the fundamental shift in my understanding is that if I view it in terms of sentiment, if I view it in terms of broader market psychology, if I view it in terms of Bitcoin and Bitcoin adoption, Bitcoin is the signal. So my focus is always on Bitcoin, but the amplitude is strategy. The amplitude is going to be Metaplanet, so on and so forth. So that's just how I view multiples.
How do you think investors should think about a high mNAV company versus a low mNAV company? Like, is one better than the other? Are there pros and cons with each? How do you think about that?
Well, coming back to the signal versus amplitude dynamic, you can't really say what is high, what is low. But what you can say is that if the multiple is at a 12, you can make a pretty good assessment that it's getting a little bit high. It's getting a little bit levered. However, there are a few other metrics that I've been working on that treat the multiple and the equity price as more of a ratio that would more accurately represent that. And I may put those out here relatively shortly. I put it out this past weekend. But what I'm getting to is this. If you take a look at the overall equity, if you take a look at its market cap, if you take a look at its share price, if you take a look at the multiple that it's demanding, you can then look at things like trading volume. You can then look at things like overall trading volume over 20, 30, 60 days. Start to bring those into your analysis if you're trying to get a more accurate view. And if you say to yourself, well, the multiple is very, very high, trading volume has been trending down, this tells me that it's time to probably rotate out or take some profits. That is the way you can assess it. But if you're trying to assess it in terms of pure multiple, pure amplitude, I don't know if you can do that. Because what happens if, for instance, and this is just a hypothetical, let's say Jerome Powell comes out, slashes interest rates to 0, the money printer turns on. Multiples are going to blow up. And there's going to be no rhyme or reason to anything. So how do you assess that, right? That is why these trades are so risky, and this is why the cheesy term that everyone uses is volatility. Volatility is vitality. It is, but volatility can whip you both ways. So when you're in these equities, you have to have an understanding of what it is you're in, and if you're in them to make that outperformance, there's nothing wrong with taking profits and rotating back into Bitcoin. There's nothing wrong with that. Or if you must, take profits and rotate into cash. Well, we're Bitcoiners, we don't talk about rotating into cash here. So realistically, the assessment needs to be real time, and that's why I use sentiment as my primary gauge.
I want to go back to the mNAV guidance that Strategy issued, and because I think a lot of people were suggesting it on Twitter, as you pointed out, that Sailor's hitting the ATM, that's why MSTR happens to be down today, and that has been said for a long time at this point. Do you agree with that? Do you disagree with that, or why do you think so?
I don't agree with that, and let's use some straightforward examples here. The ATM is issuing shares at the market into trading volume, so it is intended to be market neutral. Notice my wording there. It is intended to be market neutral. I'm not saying that 1000% is market neutral. What I am saying is, all things being equal, it is not impacting share price as much as people think. And there's many reasons why I think that. We don't necessarily have to get into anything too complicated here. But coming back to the fact that I just said that Bitcoin explains something like 50% of strategies price movements. You have the fact that we have open interest on the options market. You have the volatility vampires in the form of iMist and Misty, which is what they are, because they're playing the options market as well, putting excessive pressure on the options market. You have overall dynamics that exist within equity. That can be interest rates, that can be broader market sentiment, not just Bitcoin sentiment. You have the fact that we have leverage plays on it as well in MSTU and MSTX. We have so many different things that are impacting this equity, that saying that a mechanistic 3 to 5% of selling into volume is pushing the price down. Logically, it doesn't make sense. Practically, it doesn't make sense. And also, another way you have to think about it is, all things being equal, let me grant to the ATM doomers that the ATM could impact price, all things being equal. Sure. If the share price doesn't move and you issue more shares to the market and you're diluting in the market and nothing else moves, Bitcoin's price doesn't move, the equity price doesn't move, nothing moves, sure, in theory, the ATM equity offerings could be driving the price down. But all things aren't equal. Bitcoin's price is constantly moving. The equity price is constantly moving. The shares exchanged in volume is constantly moving. The options market constantly has people opening and closing positions. You have actively managed options contracts in size by iMist and Misty. You have the leverage MSTR plays. Where are you accounting for all of that in your assessment of claiming that the ATM equity offering is driving price? And furthermore, logically, it is not in Strategy's interest to drive their own equity price down. So there's just so many different factors that go into this as to why I don't think the ATM equity offering is driving the price down. Can it impact price? Certainly. Is it impacting price enough to make a market difference in the direction of the equity price activity? No.
How do you think, management at Strategy is going to decide when to issue, when to use the ATM going forward? Obviously, like, they changed their guidance and now they say that they can use it strategically all the way down to 1x mNAV. Do you think that they are going to, like, aggressively use it? And, like, how do you think that they'll think about this, going forward? Like, is there a number that's too low for them to even consider it? Is that simply one? Is it something higher than one? How do you think about it?
See, and that's another reason why the guidance, I think, was a mistake, because if we think through it logically, if Bitcoin is at $500,000, the equity price is going to be much, much higher, right? But that doesn't necessarily mean that the multiple will be higher. So I don't know if they can say there's a set mNAV that they can say, okay, now we'll adjust our guidance and try to justify issuing the ATM equity offering. What I think is probably more likely is that they're going to look at trading volume, and they're going to look at high volume days as ways to advantageously take advantage of it. They're probably going to look at, if we are entering a run up and the volume cooperates, they will probably look into issuing at the markets in those conditions. I don't know if they can do it as heavily as they did in the past. And that's not because of, it was incorrect of them to do it so heavily in the past. It's that now that they've put this guidance out, people are going to be watching it even more intently. So any activities that they take will have the potential for more scrutiny, and they'll have to be very, very measured in how they do that. So I think that they're going to have to walk a tightrope in terms of how they do this. And I think one of the things that they should have been doing this entire time, and this is where I differ from almost everyone in the community, is I think a proportion of all their ATM equity offerings should have been used to build up a cash position so that they can take advantage of cash secured puts, or take advantage of instances like right now, where people are being very, very critical of them, and very, very they're under a great deal of scrutiny, in terms of how they issue the ATM equity offerings, and they would have a cash position on hand to use to buy Bitcoin. So I think that that might be something that they may want to consider going forward. Trickling the ATM even more of a trickle than it was as before. Perhaps look into different models besides smash buying at the market. Look into being, instead of being price agnostic like they have been, where Saylor says we'll be buying the top forever, look into being market agnostic. Look into creating dynamics that allow them to buy Bitcoin no matter what market conditions are, no matter what their mNAV is. I think that's the likely path forward.
What do you think reverses sentiment? Is it as simple as Bitcoin rips to 150K or more, the mNAV remains roughly the same, and my strategy outperforms Bitcoin from here to there? Is that going to be enough where everyone's like, I forgot about this, Sailor's amazing, my stock and my Bitcoin is worth so much more? Or is this going to be like a longer dragged out process to where even if Bitcoin rips, people are going to remember this and this is going to be a big deal like a few months or a few years down the line?
Well, we can look at it from a few different angles. I think no matter what they do, they're always going to have people online that are complaining. Strategy can rip to $1,000 tomorrow, and there will still be people online saying we could be at 1,500 if we wouldn't hit the ATM, right? So there's going to be that aspect of individuals that will not be pleased no matter what they do. That aside, I think we have a few things to look at. We have a attention deficit or a mind share deficit, whichever way you want to phrase it. And what I mean by that is, because strategy is no longer the only player in the game, a lot of the investors that would have been in strategy are now diluted into other Bitcoin treasury companies. So it's going to be much harder for them to get that kind of crazy multiple just from that alone, in terms of sentiment and in terms of mind share and attention share. You also have the dynamic where, and this isn't me like praising them or anything like that, this is just me talking about it very, very plainly. The Ethereum treasury companies like Bitmine Emerging Technologies, Sharplink, they took a great deal of interest of retail in that run up. And there are a lot of people that are in those trades now as well. So strategy being the largest player in the game, they are now sharing attention with all these other treasury companies and now these Ethereum companies as well. So that, in terms of mind share, in terms of investor sentiment, that already is siphoning away a lot of the interest that they would see. So I think that we have a reality where, instead of people assuming a 6x or a 10x or whatnot for strategy, it may be more realistic to have more realistic multiple. Sorry, it's more realistic to have smaller multiples in mind. Also, just as a function of market cap, they're much larger right now. For them to double in market cap, they're going to have to go to over 200 billion. It's going to take a lot more capital to justify that move. And then it's going to take a lot more market sentiment to justify a multiple, because people keep confounding mNAV and a multiple with share price. And this is why I keep saying the price is set at the margin, but the multiple is set at the market. So there's going to be the equity price that stabilizes, and then there's going to be the multiple that the market assigns that equity price. Those are two separate processes that come together in terms of overall share price. And I think that's what's being reconciled right now. You have the short sellers, the arb traders, the options traders, all playing the equity, and then you have the market that's going to decide what that multiple is. Now, all of that may coalesce at the base level of the share price, but there's still two different forces that need to reconcile themselves that will then be expressed in share price. And I know I'm getting very, very theoretical here, but I'm saying all of that to say that strategy is fighting against a loss of mind share. They're fighting against a loss of sentiment, not because they're doing anything wrong, but because they are no longer the only player in the game. And to reconcile that is going to take time. And I think that, unfortunately, this is also going to trickle down to the other Bitcoin treasury companies as well. And unless Bitcoin rips really, really hard, these multiples that we saw in these run-ups, these sentiment-fueled run-ups, I don't know if they're going to persist.
So that's a great point for the next question. We've seen these multiples and these mNAV compressing across the board, whether it's strategy, Metaplanet, you name it. All of the Bitcoin treasury companies have kind of been seeing the same thing. Do you think that this is the time when other Bitcoin treasury companies are going to pursue the preferred equity strategy that strategy is kind of pioneered, or do you think that they're going to do something else, or do you think that they should or shouldn't do the preferred equity strategy that strategy has led the way on?
So with the preferreds in terms of strategy, my view is this. Do I think that they are good? Yes. Do I think that they are innovative products? Yes. Do I think that they're going to scale? Yes. Do I think that strategy or any company will be able to service the dividends in perpetuity just with the common equity? No. So with that said, I think that the companies that are best suited to consider the preferred offerings are the ones that have a scalable core business that can work in tandem with Bitcoin and the Bitcoin on the balance sheet. And I'm saying that for just to say this. I don't think it's likely, but you have to consider it as a tail risk. And I call it the crisis of scale. If the preferreds scale, and in the case of strategy, they scale significantly, that means that the dividends on them are going to scale as well. What needs to happen as it's currently modeled out, unless I'm wrong, is that you're going to be using the common to pay the dividend on the preferred. Now, the preferred scaling implies that the common stock would scale as well, because there's going to be a reflexive relationship between that. I don't see a future where strategy MSTR is languishing. It's been losing for months on end, but the preferreds are still scaling. I think that there's a scenario there where people can say, oh, sure, the preferreds can be scaled up and they can run up. But the viability of the preferreds are highly tied to the common. So I think that they will scale in tandem. I don't think that they will scale separately, even though that they are attracting two entirely different investor bases, or now five entirely investor bases potentially. Because I've had people DM me saying, I don't own MSTR, but I own Strike. Does that make sense? Right. So you have those dynamics that are in play right now. Now, I think that they can be good for like Metaplanet, for Smarter Web, for Capital, for whatnot, because they're in entirely different markets, right? Metaplanet in Japan, Smarter Web in the UK, Capital with the broader European market. I think that they have a chance to siphon capital in those markets. But I don't want people to have the assumption that these companies, just because strategy did it, they can issue preferred and then they can just pay the preferred with the common and the dividend will get paid, and there'll be no combating forces and no adversarial forces in the dynamic. So my very long answer, apologies again, is that I think the preferreds are good, but I think that they need to be leveraged in a way that makes sense. And I think that they can be a very powerful tool in terms of buying Bitcoin, in terms of adding Bitcoin to the balance sheet, but let's not act as if they do not have potential pitfalls.
So do you think if Bitcoin goes through a fairly deep bear market and strategy, has a lot of these preferred dividend obligations that they need to pay, and they've previously stated, like you pointed out, that they intend to pay that via issuing common equity, do you think that's going to potentially like crush the stock price? Do you think it's it's a risk and is not really a base case? Like how bad do you think it could be?
Well, I'll answer that a few ways. Do I think that they're going to crush the equity price? No. Do I think that they are a additional benefit? Yes, but they are also additional potential stressor. So one of the things that I've gotten a lot of flack for is the notion of defending mNAV. So they, like, for instance, if the share price gets low enough, they'll issue the preferreds, like Stride, for instance, to buy back shares to defend mNAV. So here's a problem with that. Using my model of mNAV as sentiment, how do you defend sentiment? The market's going to rate the multiple at whatever the market's going to do it at. There's no way you can defend against that. The only way you can defend against that is either by having a cash position where you're simultaneously buying Bitcoin. Sorry, you have a cash position where you're simultaneously buying shares or Bitcoin, and the preferred issuance where you're buying shares and Bitcoin. But again, how do you do that? Because if the common is getting slammed, do you really think the preferreds are going to be outperforming? I don't see that happening. So your ability to defend mNAV will be hampered because the preferreds will be hampered as well. Now, why am I saying all of this? Do I think that we're going to see a prolonged bear market? No. I recently spoke about how I think that Bitcoin is going to stair step its way to $1 million over the next 10 years. I think that what we're seeing right now in Bitcoin, manifested through the new investor base in terms of institutions and corporations, in terms of reduced volatility since the Bitcoin ETFs launched, we're seeing the early vestiges of a mature asset class that's going to have reduced volatility to the upside, but also reduced volatility to the downside. I don't see the 80% drawdowns coming. Like Saylor said, winter isn't coming again. So I'm inclined to agree with that. And I think that the preferreds and their whole thesis really rests on that winter is not coming again. Now, to be fair, let me say winter does come again. If we see an 80% drawdown, is strategy going to be, margin call that they're going to be bankrupt? No. Bitcoin can draw down like 80% again from the current prices and they'll be fine. Will they experience stress on the equity? Yes. And by proxy, will they be adding stress to the equity to pay the dividends? Yes. I think it's only fair to say that. Will that mean that everything's going to blow up? No, I don't think so. I think that corporations have a lot of innovative ways that they can survive a drawdown in the Bitcoin market. Now, some of those are not going to be ideal. For example, like we discussed, issuing ATM equity offerings at a low mNAV, pausing the dividends. I don't know if that happens, but it is something that can happen. Well, for some of them. I just think that there's different ways that this can play out. I don't think that Armageddon is one of them.
One thing that I think that is interesting about strategy is they did survive the 2022 bear market. And like my experience, a lot of the over financial engineering type, products that get created, those end up falling and collapsing, whether it's like 2018 bear market or the 2022 bear market or maybe an upcoming bear market. So one, I think it's interesting that strategy has, did survive a real bear market. Do you think that if there is another dark winter, and again, there may not be, as you're pointing out, but if there is, do you think strategy is better positioned with preferreds or better positioned with their old convertible note strategy?
I think that's actually an interesting dynamic there to think through. I think the preferreds are more a symptom of their scale, but I don't know if it necessarily makes them more or less prepared for a bear market. Because, and again, I could be wrong with this. In my view, if it, as we said, a deep dark winter comes, in that market, everything is impaired. So the equity price is impaired and the preferred price will be impaired as well. So I think that there's no dynamic where one outperforms the other. So do I think it gives them potential levers to pull in a deep bear market? Yes, because worst comes to worst, they can still issue the ATM equity offering on the preferreds. It will just be not a very high amount. Now, people can say, would that even be worth it? I don't know. But I do think that the preferreds are an additional stress test that they're going to have to navigate, if I'm being completely fair and impartial. In a deep bear market, the preferreds would be a potential additional stressor. I don't think that leads to failure, though. But I do think it does lead to a scenario where they'll have to navigate it more effectively. Now that said, because of the Bitcoin on their balance sheet, the reason why I don't think that even that edge case is likely is because companies say, "Oh, we will never do this" when things are good, but you have to really watch how they adapt when things are bad. Having 600,000 plus Bitcoin on your balance sheet during a bear market is not a bad thing. So there are many, many ways that they can leverage those holdings to see themselves through a bear market that they had no ability to do in the previous bear market, which is a direct function of the ATM equity offerings, primarily on the common stock, the ATM equity offerings on the preferreds, and the capital raises that they did for the preferreds. So coming back to your question, the preferreds may ironically have facilitated them surviving the bear market more effectively than they did last time.
Mhm. Yeah, I tend to agree with that as well. At least that's how I'm thinking about it right now. I want to kind of end or transition more towards an optimistic note because we have been looking at the bear side of things. I feel like for most of this podcast, just given
Well,
that's
yeah,
what,
Twitter, man. Twitter's crazy
yeah,
right now. Everyone's angry, everyone's pissed. So yeah.
exactly. That's what the market's been or Twitter has been talking about. What do you think is like the most primary or important KPI metric for a Bitcoin treasury company? Is it simply like the performance of the stock price? Is it BTC yield, one of Michael Saylor's metrics? Is it Bitcoin per share itself? Is it something else? Is it the mNAV? Like, is there a primary KPI or metric that you're looking at for every Bitcoin treasury company and using it to measure performance?
So I would have to say for me, it's definitely the equity price. And that's solely because now, I, again, may frustrate people by saying this, but when I got into strategy, Bitcoin per share and Bitcoin yield weren't a thing. So for me, and this could me being biased, they don't really matter for me as an individual investor. This is not me, and I want to be very specific here. This is not me saying that they have no value to an investor. This is me saying that because when I got into strategy, they weren't even a thing. I don't really hold them in high regard as part of my investment thesis. So as part of my investment thesis, the primary gauge is going to be equity price, and in the case of strategy, since I'm active in options, the kind of premiums I can see in the options. Those are the two things that I focus on primarily when it comes to strategy. And even though volatility has gone down, it is still significant enough that the premiums on the covered calls, for instance, or cash secured puts, they're not insignificant when you're playing with shares and with share amounts and pretty significant sizes. Now, if I were to pivot to like a Metaplanet, Semler, Smarter Web, I would still say equity price. I would still say equity price is a primary guide there. And I would say that, you know, the whole idea of these companies, if you're looking at them as an investment, is one, you're a believer, well, you should be, or I think you would be on some level, a believer in Bitcoin. And thus you want leveraged exposure to it. You want outperformance. So, and what people need to really kind of take into account is that you should not be looking at these over time frames. You should be looking at these over time. So, in my view, none of these companies, whether it be Semler, Strategy, Metaplanet, or whatnot, should be seen as short-term holds. If you want the outperformance, do not look at time frames, look at over time. They will outperform over time. And if Bitcoin's performance is 1, and you got a 1.3, that's outperformance. And I think that people need to have that kind of a view, just in my opinion, looking at these companies, looking at the outperformance long term. So yeah, I would think equity price, I would think outperformance to Bitcoin long term. I think that those are the primary things that I look at in terms of these investments.
Maybe one of the last questions. What's your like long term optimistic base case for both Bitcoin and Bitcoin treasury companies? Like you mentioned, maybe the period of high volatility is behind us. Maybe we kind of stair step higher. What does that look like in terms of prices for maybe Bitcoin and just Bitcoin treasury companies as well?
Well, to everyone watching this, not financial advice. So I don't want any DMs. I don't want any retweets. I don't want any of that when it comes to this right now. So now that said, what I've said openly is, I've had fun with the predictions of $400,000 for Bitcoin and all that stuff. I don't think that's going to happen. To get to 444,000, we would need like a $9 trillion market cap, I believe, and I don't really see that happening unless interest rates get really reduced, and the printer turns back on. Now, kind of leading in with that to kind of give context for this. My view is that previous Bitcoin cycles haven't been linked to liquidity; they've been linked to stimulus. And I think if you look back at Bitcoin at the different cycles, so whether you look at 2012, 2016, 2020, and now 2012, 2016, 2020, if you take a look at around those timeframes, a lot of stimulus was going on globally. The United States printed trillions, global banks printed trillions. So I think a lot of the boom bust that we saw was a reflection of stimulus, not of necessarily the halving cycles, not of liquidity cycles, but it was a reflection of stimulus. Because part of my overall thesis is that stimulus, liquidity seeks quality, while stimulus seeks speculation. And what we saw previously was stimulus seeks speculation. What we saw previously was speculation. What we're seeing right now with BlackRock, with corporations, ETFs, all of that adoption is quality. And that is why even in a higher interest rate environment, Bitcoin has still been rising. So what does that mean? Typically, when assets grow larger and larger and larger, they don't become more volatile. So I think that what we're seeing right now, as borne out by the fact that Bitcoin's volatility has been ticking down since the ETFs launched, we're seeing a maturing asset class. And that is why I think that going forward, as adoption grows, volatility is going to go down. Now, what does that mean for price? This is where my stairway to heaven analogy comes in. I think that, this year we can see 150 to 200. Or if you want to use cycles, whatever this cycle, we can see 150 to 200. I think then the correction is not going to be as sharp. So what that means is the 80% drawdowns, like I said, I don't think are coming. Could we see 30, 40%? Yes. So that means that the drawdowns are going to be more shallow. But I also think that with the drawdowns being more shallow, we have a wider and deeper investor base with institutions and with corporations. Because I don't think retail's been pushing this. I really think it's been the institutions and the corporates that have been the primary investor base. So in creating that base, for many reasons, they are disincentivized to rotate out of Bitcoin into altcoins, for instance, like we've seen in other cycles. So with that said, what that means to me is that we can run up, consolidate, run up, consolidate, run up, consolidate as adoption grows. So we're not going to see the 6x's or the 10x's or the 20x's, but we will see steady growth of 150 to 200, 200 to 250, 250 to 3, and so on and so on and so forth as we go on. And what that means in terms of these treasury companies, I think that the ones that can stay the course, like Strategy, Semler, whomever, will see growth, but they will not see, in my view, 100x like Strategy saw, unless broader market dynamics change. Then all bets are off. But unless the money printer turns back on anytime soon, unless interest rates slam down to zero, I don't know if we're going to see those crazy outperformances. So long story short, I think Bitcoin is going to go higher. I think these Bitcoin treasury companies are going to do well, but I think it's going to be more of a steady ascent rather than a crazy run-up, because what happens with every crazy run-up? They crash. And we've seen that with some of these companies and the multiples that they saw, right? They ran white hot and everyone was piling in, and everyone started piling in at higher and higher prices. And then what happens when all the traders and speculators leave? Price drops. So I think it's more beneficial for these companies for Bitcoin's price to stabilize so that their outperformance can stabilize.
I agree. It would be probably best for it to be a slow, steady climb up, but time will tell. Looking back on the history of Bitcoin, it's fun to watch whether it's a slow, steady, grind up or a parabolic bull market. It's definitely interesting. Well, Adrian, thanks so much for taking the time to do this. This has been incredible. Any final closing thoughts or where people can find you or learn more about the work that you're doing?
Sure. So if you want to find me, it's on Twitter at Adrian_R_Morris. That's pretty much my only real social media presence. I stream, almost every single Wednesday with True North, so you can find me in those live streams as well. And in terms of broader message, look, I'm one of the ones that gets somewhat unpopular because I tend to be overly logical and stoic with things at times. But in reality, I think that we all of us, you, me, everyone in the community, everyone in the investor base needs to realize that we are really kind of financial pioneers here with what's going on. There's going to be uncertainty, there's going to be volatility, there's going to be growing pains. But try to resist the urge to scream online, because all you're going to do is get guys like me that are going to shut you down or get into arguments with people that you don't need to be in arguments with. It is not going to help anything. I think all of us, if we just maintain an eye towards the future and try not to let the market gyrations affect us, but also perhaps start to educate ourselves on what causes the market gyrations, rather than screaming, it's the ATM, or screaming about different things online, I think it can benefit the community as a whole. We have a lot of newer entrants, so I try to give grace for that, but you do have to take some personal responsibility in regards to what you invest in. That said, there's nothing wrong with holding these companies, holding their feet to the fire if they do come up with something that's, unduly underhanded. And, as I'm sure you saw last cycle, if it's one thing that FinTwit and Twitter's good and Bitcoin Twitter's good for is finding out scams. So anything I'm sure will be uncovered in due time. But just enjoy the ride. And try not to get over leveraged. Try not to get over emotional. Try not to get overexposed. Just understand what's happening right now. This is a brand new market. And you, if you're in it right now, are one of the early adopters. You are a trailblazer. But trailblazers get whips. Trailblazers take losses. And that's just kind of par for the course. And we kind of have to take it in stride.
I like that a lot. Personal responsibility and having a low time preference or a long-term time horizon are, some important core Bitcoin ethos that I think more and more people will catch on eventually, if you haven't figured it out quite yet. But
Hopefully.
Adrian, yeah, hopefully. Adrian, thanks so much for taking the time to do this. This has been great.
It was a pleasure. Thank you for having me on. I'll be happy to do it anytime.
Awesome.